In this video, I'll reveal all my passive income for January from share dividends and premium bond prizes, and if you stay to the end, I'll reveal everything I've been buying and selling. Passive income is the money you make for doing absolutely nothing. For 15 years, I've been drip feeding spare money each month mainly into large cap UK companies which pay me reliable dividends. I reinvest the dividends and allow them to compound over time. By using a stocks and shares ISA, the dividends I receive are tax-free. Before we start, I'm going to go back in time to 2009, the year it all started. In January of that year, I received no dividends at all, and even the following 2 Januaries produced nothing. Many of the companies at the time cut or cancelled their dividends after the financial crisis. Then in January 2012, National Grid paid me £60, and in the following January I received payments from National Grid and GSK. Now let's return to January 2024 to see where we are today. This is not financial advice, and I'm simply showing you my own journey. We will start with premium bonds. The prize rate is currently 4.65%, but from March 2024, it's being reduced to 4.4%. There is one draw a month, you have easy access to your money, and there is a chance to win 1 million each month, and all winnings are tax-free. Last year I did very well. With average luck, I would have expected to win £1,900, but I actually won £3,075 over the whole of 2023. I don't expect to do as well this year. This January I managed to win 2 £50 prizes, making a total of £100. With average luck and with the full amount invested, I'd expect to win £200 in a given month at current rates. So my £100 win is actually not a great start. It will be interesting to see how this develops throughout the year. Why not subscribe to follow my progress? And now on to dividends. On the 5th of January, I received a payment from Tate Lyle. The shares are down 4.7% this year. They pay a dividend of just over 3% spread over 2 payments a year. Dividend history is fair, and the reason you see a fall in payments in recent years is due to the company selling off an international business. They are now a smaller, more streamlined company and should hopefully do well over the long term. This month, Tate Lyle paid me a total of £60. If you want to know how much I hold in each company, then I've listed the totals in the video description, along with a few special offers which could save you some money. On the 11th of January, it was a turn of GSK to reward its shareholders. The shares are up nearly 4% this year, and the yield is 3.6% spread over 4 payments. The dividend history has been fairly stable over the long term. This month, GSK paid out a total of £150. Also on the 11th of January, I received some cash from National Grid. The shares are down slightly so far this year, but they do pay a decent dividend of over 5% spread over 2 payments. The dividend history looks impressive, and the company has a great track record of raising the dividend year after year. This month, National Grid paid me a total of £275. The green bar on this graph shows my passive income from Jan 2023, and the blue bar is Jan 2024. It's really motivating to see the totals go up like this. Remember, I don't spend the income, I invest it straight back into the market. This graph shows my average monthly dividend income since I started way back in 2009. You can see the impact of the pandemic in 2020, but also how quickly it recovered. These figures do not include premium bond wins, these are just share dividends. At the time of this video, I'm now receiving an average of over £1,200 a month in share dividends, and because I make good use of a stocks and shares ISA, it's all tax-free. I'll shortly reveal all my purchases for January, and all I ask in return is a quick tap of that like button, as it really helps out the channel. First, a quick look at the FTSE 100 ex-dividend dates for the month ahead. 7 companies have declared their dividends at the time of this video. If you own the shares before the ex-dividend date, then you will be entitled to the dividend, which will be paid to you on the payment date. As an example, I own shares in Imperial Brands, which goes ex-div on the 15th of Feb. I will expect to receive 51.8 pence for every share held, and this will be paid to me on the 28th of March. Here are all the February payment dates, and I'll be expecting payments from British American Tobacco and United Utilities. This screen shows the highest yields, with Vodafone leading the way at almost 11%. With higher yields, there is always a risk of a dividend cut, however, and if that happens, the share price can fall as investors become worried. The average yield is currently 3.8%. This bar shows the FTSE 100 average yield. The middle bar is the average yield of my own portfolio, and the bar on the right is the yield I'm receiving from the total money invested. So what have I been buying in January? Well, I've bought more shares in Croda. It's not had a great 2023. This chemical giant supplied many materials during the pandemic, and since then sales have slowed, with many of its customers now holding surplus stock. Things should hopefully improve in 2024 and the share price could see a turnaround. Dividend history is impressive, with Croda raising its dividends year after year. I've also put more money into Unilever. This consumer giant has strong brands and a powerful economic moat. The share price has been somewhat depressed lately, but with a 4% dividend yield and impressive dividend history, I'm buying up more shares while I can. I've also bought more shares in Relex. This company supplies analytical and decision-making tools. The shares are up 36% over the last year, and I'm buying into this momentum. As you can see here, the way Relex grows its dividend from year to year is very impressive. More money has gone into the London Stock Exchange Group. They are a virtual monopoly in their field and have huge barriers to entry. The shares are up 22% over the last 12 months, and the way they have been growing their dividend is outstanding. I've also bought more Diageo shares. This company has had a rather rocky 2023, including a recent profits warning, but it's a quality company with many famous brands. I just don't think people will stop drinking Guinness anytime soon. As regards dividend history, you can't get much better than Diageo's solid track record. Now on to exchange-traded funds, and I've added a few more shares to my FTSE 100 tracker. With this one, you own a slice of all of the UK's largest listed companies all in one share. Here are the largest companies you would hold. Dividend yield is now 4%, spread over 4 payments a year. Ongoing charges are a tiny 0.07%. I continue to buy the S&P 500 in order to have a little exposure to the 500 largest listed companies in the US. Here are some of the largest ones within this ETF. Ongoing charges are also 0.07%, and there is even a small dividend paid quarterly. This table shows what I bought for the whole of 2023. As you can see, I've put more into the S&P 500 ETF than any other share. The relatively low dividend means I can actually keep it outside the ISA, and as long as I don't go above the £1,000 non-ISA allowance, there is no tax to pay. Next year, this allowance will fall to just £500, however. Now, to see how a simple cup of tea inspired me to start my own investing journey, then click here. Or to see which investing platform is right for you, then click this video here.